Hey everyone, Dan here. Before we get into it, if you enjoy these videos, please hit the like and subscribe button, and keep in mind that these are my own thoughts, opinions, and ideas. These are not meant to be, nor should you take them as investment or in trading advice in any way, shape, or form. Do your own due diligence, put in the work for yourself, and make your decisions based on that. Enjoy. All right, folks, here we are after market close on Tuesday, November 21st. We're going to take a look at Dish today. So I had a request to come take a look at Dish, and I threw together some levels on the chart, pulled up the Think or Swim study. So let's go over those and we'll call it a video. So Dish trying to sort of build a base here at the moment over, about 337, 338, and just kind of wrestling with it at the moment. It's pushing up toward this 382, 383 level that I put on the chart. So we'll see sort of where it lands in there. But let's depart from the nearest in levels for a moment to talk about this gap. This gap is not so distant in the past. It's just a few trading days old, as the stock dropped over 37% on this day and left this gap, which if it hits it to the upside, it will enter it at 485. It will exit it at 526. So would be a pretty huge shift percentage-wise if it were to come up to fill that. So I don't know that it will or when it will, but just something to keep in mind if we start to get into that 450 range, that starts to be sort of within reach. There is a level that I put in the middle here at just over $5, 503. That's a resistance level that would sort of like sit in the gap itself. So those are levels that I see to the upside. As it approaches it, we talked about that 383 level, 407, or that battle of, sort of like getting its footing over the $4 level is probably what's going on there. 437, 464, and then the gap that we talked about. Now to the downside, if it continues to kind of like bat itself around here or wrestle with this level, 337, 338 is the level that I'd really want to see it just sort of depart from if I'm a Dish bull or if I'm trying to be a Dish bull. I want it to leave that level behind. Maybe that means that it has to sort of make a really good solid run up at this 383 level, which it hasn't really done yet, right? It's just approaching it now. These are not quite close enough to call it, reaching that level. But if it comes up and sort of rejects off of there and comes down and maybe it doesn't quite need to dip all the way down to the 338 level, right? It comes and, maybe it hits around the 343, 346, something like that, and then comes back up again, then I would start to feel better about it. And if it comes up and can push through 383 and start to build support over that, then I would feel, okay, maybe it's left that 338 level behind and that's sort of past us. Now, if it dips and it loses it and it can't continue to hold it, then 305 or that incoming approach toward 3 is what I would look for support-wise. My sort of argument for that, I guess we could say, would be it's already come into this range a bunch of times and expected buyers to show up, and buyers did show up. But my worry is always what I call going to the well too many times, meaning you dip into that well and you're drawing out the water, and eventually you go back to the well and it's dry, right? So similar situation, you come into a range, buyers show up, but eventually there's not enough payoff for the buyers because the stock is just kind of keeps returning to that level. And so buyers stop showing up at some point, and then you can have sometimes a pretty quick capitulation and drop in stock price again. I don't know that that's what will happen, but I'm just saying that's sort of becomes my concern when I see something like this. Now, the levels that I put in here, just to be clear, I grabbed a bunch of them from a long, long time ago. If I'm going to zoom out to the monthly, just so I don't make you super nauseous, but if we scroll back, Dish has been in this range, this price range before. So if we go back, I grabbed a bunch of these levels from back here in the late 1990s. So just before, the turn of the millennia, it was in this range, and that's where I grabbed a bunch of those levels from, not the gap, obviously, but a bunch of those levels seemed to fit really nicely. I scrolled back, I threw them on, and then I zoomed back into present day, and I said, yep, that's basically what it's doing again. So long history sort of repeating itself, price action still sort of taking shape in a certain way in a certain range. So very, very interesting. Now in the Thinkorswim side of things, this shows you this intense drawdown up, up here in the 16s, obviously even higher if we scroll further left, and then down to the 320s. So where it's situated now is it fell out of the lower bound of the channel with that huge down day. It's just starting to work itself back into the channel now. So the question always becomes, when something leaves the channel, when is it going to come press the mid-range of the channel, like we saw here? Not as dramatic, but still, it left the lower bound of the channel, and then we say, okay, when's it going to make a motion into the channel and come test the mid-range? Made a long motion into the channel, tested the mid-range just heading, just prior to the drop, and then it came down through. So it was a long, hard road. It wasn't having much luck trying to press the mid-range of the channel, and it couldn't hold it, obviously. So I don't know if it's going to take a long time for it to come try to press the mid-range of the channel. Obviously, the longer the price situates itself below the mid-range of the channel, the more that channel is going to continue to evolve, and that mid-range will come down toward the price. So that will maybe ultimately help it reach it, but it's pretty new, and so kind of waiting to see, is it going to push off of this lower mid bound? Is it going to shrug off the red wave cloud, or is it going to be able to come up and make a valiant effort to try to push toward that mid-range? We'll have to wait and see, but right now it's just a baby trying to get back into that channel again. So the other interesting thing, it was triggering heading into that huge drop. So it triggered, and then that's when it fired. And when it fired, boy, did it let off some steam. That was like Yellowstone erupting. And so it's obviously not doing that now. This may play out for a while. If we scroll back, there was a brief trigger and fire here, and that sort of set off an initial sort of tumble down the hill. Back here as well. This one, not a lot. I guess sort of a little swoop there, but sometimes trigger and fire, not a whole lot happens, and this may have quite a while to play out as it continues to work through this previous trigger and fire. So it was a lengthier trigger than we saw in these last couple of examples. That was just one, that was two, but it came with a much bigger bang. So with that sort of eruption, I'd wait and see. Maybe that's going to play out further. This is currently looking like it's making a nice sort of symmetrical draw up, draw down in bearish momentum. We'll see if that continues to play out. There could be some hiccup candles to get thrown in there. This was relatively symmetrical, right? It took longer to draw down than it did to pick up. Sort of symptomatic of something that's kind of long distressed price-wise. So we'll see how that takes shape on this round. But that bearish momentum, picked up a bit stronger. It looks to me, if I'm eyeballing the histogram properly, a little bit stronger than this bearish momentum back here. So the bulls have a lot to do to neutralize trend and reverse trend here. It's going to take a lot. I would just sort of say that. It's not a small or insignificant thing to accomplish, especially when your chart looks like this. All right, folks, I hope that your trading week is going well, and as always, I appreciate you watching, and I will see you in the next video.